Brendan, thank you for joining me. Does this rate cut in the US change anything for Australia?
Look, unfortunately not. What it does do, though, is it provides a bit of a direction in terms of what we anticipate rates are going to change within Australia. We know that we're about 6 months behind the US in relation to our interest rate and inflation cycle. Really, the US started lifting rates ahead of Australia because their inflation rates really took off ahead of Australia's, and that's why we're that little bit behind. The expectation, though, is that the Reserve Bank will still need to keep our current cash rate at 4.35%, really until likelihood the beginning of next year, until we start to see our own inflation rates drop to levels that enable the Reserve Bank to start to pull our cash rate back down. Some key numbers to just think about is that prior to the drop of 50 basis points the other day by the US Federal Reserve, their cash rate was about 5.5% at their upper level, and their inflation rate was 2.5%. So they had a real cash rate in the US of about 3%. The same numbers in Australia show that our real cash rate in Australia is about 0.85. So our level of contractionary monetary policy in Australia has been much, much lower than it has been in the US. That's why the US is really going to start moving rates well ahead of Australia.
How much would you expect the US rate cut to feature in conversations next week when the RBA board meets?
Oh, look, it'll certainly be a passing note, but I think as I've just explained, the likelihood is that the Reserve Bank knows that where we are with our own interest rate and inflation cycle is markedly different to where the US is at, and also many other developed economies around the world. So we are just lagging behind, and we're just not in the position just yet for the Reserve Bank to really change its stance with regards to interest rates here.
The RBA Governor Michelle Bullock was quite firm after the last meeting, saying not only should we not expect a rate cut this year, she also indicated a rate hike was not off the table. Do you believe that remains the case?
No, I think that we've really topped out with regards to our interest rate settings here. I know that there's been various people advocating for further interest rate hikes, but really that's past now. What we're seeing is an acceleration in the downward cycle in inflation, the likelihood with those cost of living measures as well, that while themselves sort of muddy the waters a little with the inflation read, what they will do is start to have secondary effects into things like wage setting processes and other utility setting processes that will also start to bring inflation down. But really, those underlying price pressures won't start to emerge as falling until really the beginning of next year. So yes, they're important, but I don't think that what we're going to see is the driving impetus for rate cuts in Australia until the beginning part of next year.
The monthly inflation figures are due out on Wednesday. What are you expecting to see?
Look, I think that they're going to see a pretty large fall, actually. I know that the August rate was around 3.5%. I wouldn't be surprised if we see the monthly rate fall to around 3%. I know that some of the banks are suggesting that it might be in the high 2%. One of the things to recognise is that the methodology that the ABS has with regards to this monthly inflation is that you often see a little bit of a kicker in that second month. And so what we might see is some of those trailing factors still keeping that monthly inflation just that little bit higher. But nonetheless, I still think that what we're starting to see is that inflation start to drop pretty quickly.
We'll have to wait and see what happens next week. Thank you so much.